to the next. How do we build the common rules, the common guardrails, right, to get these markets to grow, but at the same time to get insurance companies to scale as well? Because the nature of the risks that they have to take on, as some of you may know, are growing larger and larger. East Africa had its worst drought in 40 years in 2022. Southern Africa is going through something similar at the moment. In West Africa, we had enormous floods left and right. And all of this is becoming deeply, deeply problematic, right? For companies, for households, for citizens, and they all have to be managed. So I'm very glad to have that we have, to say that we have an excellent panel that's going to come up and have this discussion with us in a bit more detail, with a mix of both industry players, reinsurers, and regulators as well. I'd like to bring them all up to the stage at the moment, starting with Kenneth MATOMOLA, who's from Namibia, the financial institutions regulatory body in that part of the world. We've got Namakau MUNDIA NTINI, who's the CEO of the Pensions and Insurance Authority in Zambia. Hope MURERA is the Managing Director and CEO at ZEP-RE. It's going to be interesting to get your perspectives on, market consolidation. Abderrahim CHAFFAI, who's the President of the Supervisory Authority of Insurance here in Morocco. And Ouafae MRIOUAH, who's the CEO of the Société Centrale de Réassurance here in Morocco as well. So please, all of you. Right, I believe we have roughly 40-ish minutes for this entire conversation, but we'll essentially open it up to you roughly halfway in between. So if you've got questions that you'd like us to put to the panel, please, by all means, have that in mind, and we'll get to them as soon as we can. I want to start, in a very broad sense with the regulators on the panel, right? When we started the session earlier today, the question of scale repeatedly kept coming up. And we put that question to bankers, and they say, well, if we're going to scale, we need, common rule sets, etc, etc. But does the same argument apply with insurance companies from the perspective of the markets that you look at? Do we need to consolidate the industry so you have fewer companies dealing with a much bigger set of risks, or are things okay as they are now?
Hello. Yeah. Thank you so much. Thank you so much. First of all, I just want to appreciate the opportunity to be on this panel with great people that will be discussing this very important subject. Yes, that's a very good question. And I always want to look at it from the perspective of, rather than prescribing that we need to do consolidation or have these big insurers that are operating right across Africa, we should perhaps look at it from the perspective of form following function. I always like to say, let us first of all look at what we want to achieve. And once we establish what we want to achieve, I believe that the form will really follow the function. It will then define what sort of a structure that we are going to put in place. And so from a supervisory perspective, certainly we want to see big and strong underwriters or insurance entities that are able to deal with the various risks that we have. And it's important that we all have a convergence around the regulatory framework. And I can speak to that. I'll leave a lot of detail to Kenneth, seated right next to me, because he's also from a similar region, and he'll speak more in detail in terms of what we are doing. But right now, we realize that we've got a lot of risks that all of us are faced with. And I like the reflection that was put in the 2023 Africa Risk Report that says, the two biggest risks that we are faced with right now, I think globally, is really around geopolitical risk and climate change. And when you look at Africa right now, the biggest issue that we have is climate change. I think all of us have experienced that in Southern Africa. We are having the worst ever drought that we've ever experienced, and it has brought about issues like energy crisis in my own country that obviously affects the industries. So we're looking for underwriters, pretty much not really coming together and having this strong one insurer, but those that then can take up a risk and work together. Can we see more of risk pools, more of consolidated underwriting where a risk is then shared around the jurisdictions? Can we, as regulators, catalyze conversation with the policymakers so that the policymakers that are sitting in the different jurisdictions can then have that political will to work together as opposed to working sort of in silos? I'll take a pause there and just pass on to Kenneth to give his bit. Thanks.
Thank you so much, and thank you for being invited to be part of this panel. As regulators, when some of these questions are posed to us, we deeply reflect on them. And referring to the question that has been posed, whether we speak about how do consolidation should happen, but the starting point is the policies, regulations, and supervisory frameworks. Because if these are aligned, then the playing field will be even, and people or the participant or the players in the insurance industry can play in whatever jurisdiction because the rules are more or less aligned. But this is a bigger challenge, to align these different rules, if I may use those words. We know for different reasons. One of those reasons would be probably in the same region. For example, the region where I come from, we have the Portuguese speaking, we have the French speaking, we have the English speaking. All their laws are influenced by this type of way, the language that they speak about. But they need to be a political will and governance structures to be able to implement the leveled playing field for operators. And for this to happen, they need to be a conversation between policymakers and supervisors like ourselves as regulators and the industry. And once a political will is obtained, then matching orders are given to create governance structures. If I speak about the Southern African region, SADC, where I come from, the policymakers have decided and say, here are some protocols. Please create a governance structure. And the governance structure was created where all the regulators sits, and these regulators looks at the rules and advises the policymakers, say, this is what should be happening in the region. And when this is approved, then they need to be implemented. Sometimes these rules are approved, but the implementation thereof becomes a challenge. And that same governance structure must come up with a mechanism on how implementation should happen. And when these rules are harmonized, then the players may decide to consolidate or may decide to grow up their business. That is the choice of the regulated entities. But ideally, given the magnitude of the risks that, as Namakau have said, that we are exposed to in terms of climate change and geopolitical risks, these are quite so big. Therefore, requires entities that are well capitalized, requires entities that have big balance sheet. And that's the challenge to the players. Hence, maybe consolidation might be an idea in order to increase the take-up of these risks. So the starting point, like I said, is the governing structure which can implement a playing field that is leveled. And when the governing structure is implemented, it's also important to make sure that how do you go about aligning these legislative instruments? Maybe I should say, fortunately, in the insurance space, regulators throughout the world converges in one organization that is called IAIS, which sets up standards. And that helps us on the African continent to be able to converge, because these principles allows us to be able to converge. So if we can adopt those. So that is my initial thoughts on the question that has been asked, so that I shouldn't take much of the time. I can go on and on to try and relate the Southern African experience.
Well, we'll certainly get into the details a little later, but I want to expand this right to the rest of the panel, starting with you, Abderrahim. There's a case here for consolidation, right, across the market. But in some instances, if I require, for the sake of argument, if I'm a regulator in Kenya and I say that you have to have near liquid assets, within the East African community, if you're buying bonds in Uganda, Tanzania, that's fine. That's not treated as an offshore, right, acquisition, an offshore asset. But if I come into the capital markets in Morocco, that's going to be treated as essentially an offshore, right, asset. What sort of common rules would you like to see to help build up to that gradual consolidation in the industry?
Thank you, moderator. I think the big bang approach might not work properly. Given that we have regional groupings within the African continent, that's where we need to start from. We have a regional grouping in the Southern Africa, East Africa, West Africa, and Northern Africa. So that's where the conversation should start to happen. And this can be rolled up. And fortunately, we have the African trade instrument that is put up by AU, which we can make use of to start converging. And the important thing here is if the rules within a given grouping changes and start to recognize that these are domestic assets, are no longer offshore assets. And this can be rolled up to the next level. So that I know of an initiative that is ongoing on the African continent to create a platform for all the insurers. And if that can be supported and consolidated, especially supported from the AU perspective, then this could bring about some of these required changes, given that these initiatives are taking place in these regional groupings.
Indeed. I want to open up that question to the rest of the panel. How do you think these rules should come up? Ouafae, do you know it? Yeah, it should be on. Yeah.
Alors, voilà. Je voudrais
I would like to say, with regard to this regulation issue, to give my point of view regarding this. As insurers at the level of Africa, this sector is represents less than 1% at the world level. The reach rates in terms of insurance is still very low, at 3.5%, and in Africa 1.2%. We are at very low reach rates. We are also facing a big challenge in terms of introducing insurance into Africa in order to contribute to the economic development. With regard to the the Africa Continental Free Trade Area, it may leverage economic growth because it can facilitate trade intra-African countries. It can enhance investment in infrastructure. It can also facilitate the movement of assets and individuals. We normally need to make our economies more formal. I believe that this is a very interesting opportunity because it can help leverage insurance opportunities and possibilities. The potential that exists needs to overcome the structural obstacles that exist in the continent, especially the regulatory aspect of them. And also the difference from one area and one country to the other in this respect. Also, the payment rates need to be improved. The solvency also is different, and the levels of solvency is different from one country to the other. And also the regulations implemented in each country are different from the others. Also, the tariffs regulations needs to be looked at because there are differences in this respect from one country to the other. There are also the rules of investments that represent regulatory differences that lead to the slow trade between the African countries. Also, they represent a barrier to the unification of the market. We need, as actors in this field, to achieve harmonization, and we believe that it can't happen abruptly. We need this harmonization to happen progressively to help the countries to adapt to their local realities, and also we need to reach out to more developed countries and to have the technical follow-up and help that we need.
What's your view, right, on this question of getting the industry to have common rules across the board?
Voilà, ça marche. D'accord, merci.
Thank you. Indeed, if we look at this objective represented by the AfCFTA, and if we look at the trade inside the continent, it's less than 10%, while the average internationally is 50%, and even in the EU it reaches 70%. So we can at least develop in this respect the insurance markets, but we have to overcome this fragmentation of this market. So in simple words, we can speak about regulations and criteria for the assessment of these. We can consider solvency and everything that relates to the protection of the consumer. And these are criteria that can improve the competitiveness of our market. So taking into consideration the evolutions that are taking place and working on the on this level at the international level. If I take the example of Morocco, we are working on the solvency based on the risks. and it is all the time taken into consideration in the implementation in Morocco. I believe that these are the points that needs intervention in priority. So taking into consideration the fragmentation and the difference in performance, we can imagine a convergence system to be able to reach this objective. So in terms of the AAA elements, so we have spoken about the regulation in terms of solvency. We are speaking about the regulation framework, which depends on internal reforms that enable to act on the standards. So without these reforms, we can't benefit from the cooperation between us. So for instance, the Moroccan regulations, so when a risk is in Morocco, it needs to be insured in Morocco. This is according to the framework, and the law stipulates that when there are agreements between countries, the risk can be accepted according to this agreement. So this is an element that can give this AfCFTA the possibility to be operational, but the other important thing is to achieve this convergence. But there are many steps to take before getting to these objectives.
With respect to the perspective from ZEP-RE, and I'm building on something that Abderrahim has actually said, you know, if at national level, countries are essentially saying if you're going to insure the risk, you have to essentially provide some sort of cession, right, to a reinsurer, right, at national level. And yet at the same time, we're talking about consolidating the industry. How do we balance those two requirements? Is there a case to be made for consolidating insurers and reinsurers while still sort of meeting those domestic cession requirements?
Thank you very much. Is that on? Yeah. Yes, there is a case, right? And by the way, at the reinsurance level, we do pool together. So I share business with SCR Morocco. We share with Africa. We share with CICAR. So we are doing that at the continental level. And there is room to do more. But as Madam Tini said, even within what is existing, what are we actually sharing, right? So at the end of the day, before we do sharing, what are we sharing? It is true the risks are getting worse, the severity and the frequency is increasing, and we therefore need to rethink how are we going to do that. But I want to step back and say that there are things that are working, right, at a regional level. We are privileged to be a public-private partnership institution, and we run 3 pools that I wanted to share of what is working, because it has worked, and it had both the political will that you heard a lot about, but it had also it had regulatory support as well as the private sector coming in, or the insurance market. One is we run 2 pools that are COMESA pools. So we are set up by COMESA member states. Our shareholding are both public and private and DFIs. And we run a motor vehicle third-party insurance pool that is standardized across the COMESA member states, beyond COMESA actually. There are countries in SADC that have gone through. This has...
That's like 20-ish countries
23 plus countries now, because you have even the SADC, Mozambique pulling in, Angola pulling in. So it has worked, and this has been going on for the last 30 years, right? So it allows people to move. It's an insurance product. It's working. Of course, there's always things to calibrate and improve. You know, how are we managing the indemnities in different places and all that? But it is working. It's allowing movement of people, cars, and goods. The second, and by the way, we're talking about 300,000 policies annually, right? We're talking about premiums in the million, $20 to $30 million. So it is working, it's regional, it involves insurance companies, reinsurance companies, regulators. It is working. The second one is what is called the RCTG, the Regional Customs Transit Guarantee. This is an instrument that allows an importer from the port of Mombasa taking their goods to DRC to have only one customs bond. And that is working up, through 30 or so insurance companies across 5 countries, right? And it's protecting customs, it's taking out administrative issues, it's dealing with cost. So what we are saying is this works. Can we scale that, right? Sometimes it's about copy and paste, like we had a conversation earlier in the room. If something is working, can we grow it? Can we scale it? So we have good examples. This is I think, an amazing product. We have annually protection of goods worth over $1 billion. So that is working. I know there are attempts to do different things, but how can we pull even what works to make sure it does? The third one is the DRIVE project, something we're very, very passionate about. DRIVE is de-risking inclusion and value enhancement for the pastoral communities in the Horn of Africa. As you've heard, drought is no longer now, cycles of 15, 20, 30 years. It's every year there. If it's not floods, it's not drought, it's floods. If it's not in the Horn, it is in Southern. So this is a project supported by the World Bank on behalf of 4 countries of the Horn of Africa. We are managing what is called Component 1, layering risk, right? Combining savings and insurance products, parametric, index-based, to cover the past risks against drought, but also bring them into the insurance as well as banking sector. So we get them to open accounts and all that. This is working. Within 2 years, we've reached 3 million pastoralists and their families, 56% of them being women. So this is a regional pool. This was brought by political will. It is an ecosystem where you have insurance, banking, the cooperatives, last mile people, the World Bank coming together to create solutions. I'll stop there for now.
I want to build on what you've said with respect to the copy and paste approach. There are things that are working in certain markets. How can we expand them to the rest of the continent? Which brings me actually to Abderrahim CHAFFAI. This time last year, Morocco was recovering from a devastating earthquake up north in the country. And one of the things that, for me, as an outsider, was interesting looking at how the country responded was the fact that there was this parametric insurance policy that was in place that triggered a payout of, I think it was over $250 million. But given the context in which we're operating in now, these events are becoming, or rather catastrophic events are becoming a lot more frequent. Lots more floods, lots more drought across various economic blocks in the country. Rather across various economic blocks on the continent. What is it about the way Morocco structured that protection policy that the rest of us can learn from in other regional economic blocks? If you were to sit down with my regulators, for example, in East Africa, what would you tell them?
Très bien.
Well, in terms of risk management of natural disasters, we had a number of experiences. So we have the risk management related to agriculture. So this has been done by subsidies to small farmers. In terms of costs and expenditure, this is a success because we have exceeded 1 billion hectares funded by this instrument. We have also the public-private partnership led by the Ministry of Finance, which is working on this. We have also the evolution of the system that works on the impact of climate change with the repetitive drought seasons that we have experienced. And we are working on the balance of all these projects. And we have other projects in the process of studies. So with regard to the repercussions of the earthquake that took place in Morocco in September 2023, we have two things here. So the preparation and the anticipation by the establishment of a coverage, and which led to a good response thanks to the initiative of His Majesty King Mohammed VI, who gave his instructions to make sure that the people who were affected to be supported as soon as possible. This goes beyond the insurance coverage, and so the work was really extraordinary on this level. So we have a system that was set up by means of a law that was passed in 2016, and this system is really second to none, because it covers insured people and non-insured people. It is adapted to the countries where the insurance coverage rates are low, and the insurance companies have an obligation to extend their coverage to the non-insured people who can be covered by the Solidarity Fund. This includes coverage for homes and bodily injuries. The financing of this system is really original, because it's comes from 1% of the insurance policies in general, and it allows to transfer the part of the risks to the international coverage. And with regard to the earthquake incident, the coverage is set up from the Solidarity Fund, which is a $275 million fund, and it allowed us to react quickly, so and to avoid and overcome the problems of reassurance. So the compensation was given to the people concerned with this. So with regard also to the insurance system, which was managed by a group that was led by the local insurance company CAT. So it established an information system which allowed us to manage all the requests and to go through the compensation stages, and while paying back the companies, the insurance companies, at the same time. So all this system was put in place. Of course, it is not a perfect system. So we are now thinking about how to develop the law which govern this system. The payments were immediate. This was thanks to the funds that were made available to be able to compensate the people right away. Now we have an experience that can be followed by other countries. So we worked with Tunisia, who are working now on this system, and they have copied the system that we worked with. Also, Egypt are also working on this system. And we have a number of sub-Saharan countries who came to look at our experience, like Senegal, Cote d'Ivoire, and other countries. Also, this system is interesting for countries in Europe. We have received a consultant who works for the Portuguese government, who is now reviewing and looking at this system of insurance. Also, we had another consultant from another country that I can't recall, who is also working on this question. Also, we are working with markets where insurance is highly developed, but still they are interested in this system. We have also worked with the French system. We have discussed this question with them because there are still people who are not covered with insurance. Also, in Germany, there is this issue of homes that are not covered against, insured against floods. Also, we are working with the organization that, if I recall the name, it's Lenders, who are checking these systems in order to reduce this protection gap, for them to be able to activate it, even though there are no insurance policies in force, and to be able to respond to such events and to have mechanisms that can be activated at the time of the disasters. I will go back to this question regarding the consolidation of the market and the questions related to how we can benefit in our continent from the systems that cover people who are not insured. And as far as I'm concerned, what we need to know is that the reassurance system in Africa is protected in Africa. So all African countries apply measures of protection at the level, at the local or regional level. And with regard to this, so whether we have to focus on the protection or liberalization of this sector, the economy needs sovereignty. There is no question about this. In order not to be dependent too strongly on foreign countries, we need local resources and also the reinforcement of the institutional systems. And in addition to this, insurance comes with challenges in terms of rating requirements and also the expertise needed. And I believe that the solution is in the balance between protection and liberalization. So we shouldn't hinder the competitiveness of the continent, and also we should avoid an exaggerated openness, in order not to be fragile in front of the international institutions. The free trade areas in Africa is a solution that comes right in time, and it brings solutions to this balance issue. It enables us to have mechanisms that enable us to think at the continental level, and it will allow us to consolidate the insurance players who exist on the African market. And it will also allow us to build our capacities and to play our role fully in the resilience aspect. And of course, collaboration between reassurers is very important in order to be able to innovate and to create reassurance pools and also to benefit from support in terms of rating and to find resources that knowing that the continent is facing many challenges in this respect.
And then we'll get to the regulatory perspective.
Right, I agree with all that, right? Yeah, right, son? How do we consolidate? How do we manage national interests? And how do we follow trade liberalization, right? As an industry, we'll have to follow that. It won't be in a vacuum. But I want to step back and also talk about what is it also as an industry we can do differently to bridge the gap, because you had in the question you also had about the gap, which is increasing, not reducing.
Yeah, the protection gap is huge. The protection
gap, it's huge. So some of these issues are structural. If you look at, and we were about copy-paste from, Morocco to Tunisia, but we've actually all along been copy-pasting products from the West, right? Sometimes I call them colonial products because they are not addressing the need. So we need to think, where is the need? Our structure of our economies is smallholder farmers, is SMEs, women traders, cross-border. Are we addressing those needs? I think as an industry, as regulators, as countries, it's something we need to think about and make sure we do the product so that we grow that base. And that's the base that will be able to allow us to weather the shocks. But right now, you're having just a few risks that are fought by competition of thousands of insurance companies instead of growing the pie.
So that's sort of like the original sin, for lack of a better word, is partly structural, but also within those structural constraints, the willingness to pay and ability to pay question. Because I can structure a product, right, for small-scale farmer protection, but do they have the money to actually afford those products?
Yes, you can, and we are doing that, right? You just have to think about at what point do you do that. The farmers need inputs. There's a successful one in Zambia that is called FESEP. You put insurance where they get the inputs, the seeds, the fertilizers.
You embed it into the product.
You embed it into credit. You embed it into inputs. This is the way we should think about it. Because at the end of the day, the farmers need credit. They need inputs. But we know that without insurance, they really are not protected, right? So those are the things to think about. But also the distribution channels. How are we reaching them? It's going to be, it's a tough call to say you're going to teach every smallholder farmer insurance. And really that is not the main reason. It is to embed the things that we know the farmer needs and make sure that the farmers are protected, because that's how then we'll be able to deal with the climate shocks that are increasing, and they are the people that are most affected. The other part, so what are the right products? Are we dealing at the right level? Are we distributing it rightly? The second part is what we have learned from Morocco. Most of our governments do not take up insurance as a de-risking mechanism. We know that that is very, very critical. If you think about critical public infrastructure and assets, insurance is the most viable, effective way, cheaper way of dealing with that, because then you're pulling together all that. And yet we know, I mean, we've seen that in Kenya in this last year. We've seen that in Zambia, the floods. They're coming and wiping up schools and hospitals. How long will it take to rebuild that? So we need to get the governments to really, really get involved in insurance and understand it as a de-risking mechanism. And then have the private sector think about where are we supposed to play? Where is the need? How do we increase the base? Then we can talk about sharing.
When you put this argument to governments and say, guys, at a sovereign level, you need to be able to figure out where you're going to get insurance, because these risks are becoming a lot more frequent, right? We get hit by droughts, and more often than not, the damage is not limited to one country. Zambia is a fantastic example of that, because you look at the way this drought has battered Southern Africa, right? The Kariba Dam's gone down. That hits power in Zambia, hits power in Zimbabwe as well, right? So the risks are never, neatly confined to our national borders. But when you make this argument to states, what's the reaction? What's the thinking? Why is it that governments are still a bit reluctant to take national level insurance?
I really think governments don't have a choice. They just have to deal with that because, they still have the sovereign responsibility over citizens. So it's a question of, are you going to use insurance, or are you going to come in to mitigate the losses that a country suffers from a central treasury perspective? And so I see it as a government not having a choice. They certainly need to see the value proposition that is there in insurance. And speaking of the Zambian experience, yes, we did start a national agricultural scheme. It's been there for so many years, and it was really there to assist the small-scale farmers to be able to access seed, to be able to access the fertilizers, and be able to, just to build food security at household level. And so about 5 years ago, they decided to then embed the component of insurance. And the whole idea is because government realized that in as much as they give out all these farming requirements for somebody to be able to grow something at household level, when a disaster strikes, what happens? There's nobody who has to come in, and then central government has to still appropriate to be able to come in and give appropriate support at household level. Hence the national agriculture scheme that is there. We currently have a consortium of underwriters that are supporting that, and it's got its own challenges, but I believe that it's one that can be refined. And at regional, when you talk about the REX level, regional level, we can actually refine that, because then we have many jurisdictions. We have neighboring countries like Zimbabwe that are exactly in the same state as we are in terms of the drought situation that we're currently ongoing. So this is something that can be scaled up at that level. And I really think that a number of insurance entities, there's need to build capacity on an ongoing level, because these risks keep changing. The severity, Hope talked about that, the persistence of these risks. And we need to help the underwriters themselves to build that capacity. And as a supervisor in my country, we did sign up, support an agreement with the IFC, and they're giving part of what we're getting out of there through technical support of ZEP-RE. We do have capacity building that is ongoing beyond the support that governments give at national level. How can households, how can small-scale farmers opt in other words, take up insurance on their own? It shouldn't be seen as support that is just coming in from social support from government, but on their own, they need to realize they can actually take up insurance, and that's part of what we are doing. At regional level, we're also looking at, under the SADC block, we're looking at a project where we can sort of pool the insurance premiums. We're undergoing, we're doing a project on reinsurance to look at where is the money going, because whether we like it or not, whether we come up with protectionist rules to keep it in country or in region, the money still goes up. I just don't have the latest statistics on my fingertips, but there are a lot of premiums that still end up in offshore markets, and these are funds that we can help to build the capacity in country. I heard Morocco do have provisions in their law where they say all risks that are in the country must be insured. We all have them in our laws, but we know that in as much as we have them, most of our underwriters will probably just take up 0.01%, and the rest of it is obviously reinsured. If there are mandatory sessions, they go through the mandatory sessions, and ultimately they end up offshore. So we need to be a bit more deliberate in terms of what we want. And I believe, like I earlier submitted, it has to take the political will to do that. At the regional level in SADC, we've come up with model laws. They are only model laws, and you can't force jurisdictions to then follow those model laws. So really, at jurisdiction level. This conversation has to be escalated at policy level, and it's good that under SADC, we have a structure that falls under the Committee of Ministers, and these are the people that make the decisions. So this conversation, yes, when we talk about, regional trade, the Africa Continental Free Trade Area, we need to escalate it, and the stronger punch has to be felt at policy level, because then I believe that all the markets really are going to follow suit. I think Morocco is a good example. They talked about how His Majesty, gave support and everybody followed suit. So it happens everywhere. Once a tone has been set at the top, everybody follows.
And that's certainly something I think we'll discuss in a bit more detail. But I want to open it up to the floor now, because I'm sure that our audience has been listening to the conversation here, and they will have questions for you. So if you've got a question for panelists, please put up your hand. I think we've got some roaming mics in the room, and we'll certainly get a microphone to you as fast as we can. Any questions? Gentleman in the back right there. Please introduce yourself and fire off your question.
Good morning. Thank you for this very interesting discussion. I'm Charles Boyou from Forvis Mazars. My question is about market segmentation. My feeling is that you will confirm or not, but you mainly spoke about insurance for retail consumer more than to business and corporate. And I was wondering whether, when it comes to integration, do you think that, how do you assess the level of maturity of the market in insurance for corporate? And do you think that when it comes to integration, it will be maybe easier to move to integration concerning regulation and supervision framework for corporate to ensure infrastructure industrial project, while for retail it is possibly more difficult to overtake this national concern?
Oh, okay. So market segmentation. Yeah. Go for it.
Absolutely. It is very important to do that, and I do agree that we need to look at that. I mean, currently in East Africa alone, for a company, a Kenyan company, to set up in the region, they have to put capital, right? So what does that mean? Even within East African community. So definitely that has to be worked on, and I think the regulators did say that's something, harmonization is something that they are working on. We've seen CIMA work better, the CIMA region. Definitely I'm in agreement. The only thing I'm saying is that at the end of the day, we still won't close the protection gap, right? We are talking about 0.5% of what we should be addressing. So it's not one or the other, we have to deal with both.
What is it that the CIMA region is getting right that other parts of the continent aren't?
I don't know if there's somebody here from the CIMA region, but they have a single regulation, right, across multiple countries, and this has been going on for a long time. So the regulation is at a regional level. They do have country reps, but it is a harmonized insurance regulatory regime.
Kenneth, you anyway?
Thanks. I think in the CIMA region, like she rightfully said, they have one regulator for those multiple of countries, and that helped to harmonize the regulation. And for us in our region, we have that aspiration and of harmonization, and this has started, like Namakau have said, we have come up with model laws, now have been approved by the ministers, and now it's the implementation stage. And we will see that as something that will move forward. Coming back to the question that has been asked, if I understood it correctly, maybe I can relate this to the Namibian experience, where you'll find that recently in Namibia, oil and gas has been discovered, and we have green hydrogen that is ongoing, and the investment thereof is quite huge. And the insurers in Namibia, I have a big doubt that they can take up that risk. So they need to offload it somewhere else. And that, therefore, it's quite critical to fast track this integration, that this risk can be shared within the African continent. And there was a question that probably I also needed to react upon regarding the conversation with governments. In Namibian experience, it's quite unique that in the same year, you can experience flooding on the other parts of the country. On the other part of the country, you experience drought. And this has been so difficult on the part of government to be able to sustain its citizens. And the conversation that is happening now with the policymakers is that is the policy currently whereby fiscals able to assess the affected communities, is it working? And we have seen that it is not working, and therefore we need a different strategy. And that strategy is to ensure that some of these incidences need to be insured, and they're quite large in scale. And how do you do that? Then it begs a question of saying integration is no longer something that we see as far away from, but it is an issue that it's a need currently that it need to happen because of the frequency and the magnitude of the risks that are coming out. So these are quite, government has realized, and those conversations are ongoing. They have that appetite to deal with it.
Indeed. There's a question from the gentleman in the middle row.
Hello, Mohammed Mejoud. I'm the Finance Inspector General in Morocco. So I'd like to contribute to this debate by drawing attention to the fact that insurance management, and my question is addressed to the President of the authority, National Authority, for this. We needed to invent a whole new system in Morocco to adapt to the management of natural disasters and these effects. And the question is that with the change, climate change, even the risks become conventional risks if we compare with what is actually happening in the world today. Doesn't this call for global regulation, because it is the entire planet that is in danger? It is no longer actually a few episodes of drought. We now have permanent drought. So should we still deal with this notion of natural disaster? Can we maybe have an idea of maybe talk about maybe structural drought, for example, which is actually impacting Moroccan agriculture and also other African countries? Can't we think of maybe redefining what we call international finance with regards to these constraints that impact the economy and societies? Maybe we should have water finance programs, finance centered on water, because today we see that we have water reserve in some countries, and we have some water quantity deficit in some other countries. So we can also imagine it gasoduct and also aqueduct, and also in other regions in the world towards the regions that are a lot more impacted or affected. So first of all, global regulation to especially with regards to climate change, and also afterwards, shouldn't we think of innovative solutions to actually find a lasting solutions for these? Thank you.
Excellent. Donc, effectivement,
Yes, excellent. This is a huge problem raised by my colleague because we have the effects of climate change. And these climate change effects, if we are able to go through the Paris Accord, we are going to have a rising global temperature of about 1.5 degrees. But in Africa, it's a bit more. In Africa, the estimations is that it could be between 2 to 3, which is quite dangerous. And also, this phenomenon that we see today would even get worse over time. If we do nothing, of course, if we do nothing, if we continue, that is the 8.5 scenario we're going to see. It means I'm going to have temperatures of about 3 to 4% or degrees in Africa. So these are really going to be atrocious levels that would radically change the exposure to these natural disasters or events. So we have intense periods of drought, long periods of drought. So they do not come in instantaneously. So periods that are going to be more frequent, and also we're going to have precipitation peak periods, and this would also create flooding. So on the average, if I take a look at Morocco, if we get to the Paris Agreement, we get to levels of 1.5, we would have precipitation in Morocco of about a reduction of 20%. That's what we've seen in the past. And if we do nothing, it will jump to 40%. And even with changes in the zones that will actually receive the precipitation that is actually left, it's not actually the areas where there's a drought that are going to actually benefit from the precipitation. So we have the governments. The governments should work to mitigate these risks with climate change through the reduction of greenhouse emissions, and also taking in mind that Morocco, our country, His Majesty launched a certain number of projects for renewable energy, amongst others, which are means of reducing, even if we are not as much responsible for the negative emissions compared to the northern countries, for example, but we should still play our role, even if we emit very little. And all of this would allow us to manage the consequences of these events. I think with regards to COP28, where the decision was altered at the last COP29, there were funds that were going to be paid by these countries, and these global funds would come to work and combat the effects in the most vulnerable countries, and especially African countries, and also developing countries, because naturally they are not responsible when it comes to causing the climate change. But so for this, I can think that we have about, I've forgotten the amount exactly, but I think $300 billion allocated, and this is now an option. So that is the decision of COP29 for this decision, which was actually to make it a lot more strategic and important. So we do not have other solutions. Even if we regulate, the reality of the market is that you're going to have an increase in the frequency, and this increase in frequency is going to actually increase the cost of insurance, and maybe risk. Could there be risk that could not be insured? If I give the case of France, especially with regards to homes, and what is happening, they are now at 20%, but by 2050 or 2040, they are thinking of maybe 40 to 50%, maybe an increase of 40 to 50%. Could it be able to be insured? But we should have a mechanism, and we should be able to activate them to be able to support the system to have a transfer, especially for developing countries, or as principally a continent, which is not responsible for these sad events, but we are at this point, we are quite strategic in this vision and the impact of climate change. I agree totally that financing should be allocated to mitigate the risk and also give the potential to these countries.
The loss and damages. Just one minute. The loss and damages fund, right, has $750 million, right, baked into it. But the question is always, will that money actually flow? Because more often than not, when we wait for Western capital to show up, more often than not, it doesn't come through. So the solution has to be here, right, in the room, within ourselves. How do we make it work, assuming, for the sake of argument, the loss and damages fund doesn't deliver, or it takes a long, long period of time to become actualized?
I think on this point, we should have the capacity to go look for this money, to present projects. Even when we take the look at the Moroccan case, we have, when it comes to reduction or prevention, when it comes to catastrophe, natural disasters, and each province actually comes up with a project, and this fund actually finances these. So we have about 3 billion dirhams, Moroccan dirhams. I'm talking about the funds that is actually being managed internally to finance projects. So we should actually have people that are prepared this project. So we have skill set that must be improved. We should have support, especially for us in southern countries, to be able to benefit from these and present projects. We see when we take a certain look of certain projects. I can mention a few. If you take the question of flooding in Morocco, for example, we've not found an adapted coverage, so we needed to innovate. So we're trying to innovate. We're able to find a user case where we had a pilot experience to tell us if our system, as we try to take a look at that, allows us to respond satisfactorily or not, and can we actually now apply to a larger population. So we had different types of financing where we actually address ourselves to affected people. But these support programs in our countries, in our continent, to be able to actually build projects and also defend these. I would just like to raise this last point. It's got nothing to do with that. It's just a remark from my colleague. So, with regards to retention of premiums, and so when we are in countries and we actually miss the premiums, and the countries are not able to benefit from it. So I give an example for Morocco's case. I think that in Morocco, no premium actually gets to the market without the prior authorization of the market. So it means that all subscriptions to have any foreign transfer should be actually sanctioned by the regulator, following a certain number of criteria. So we consult the market. The market tells us that we do not have this coverage, and at this point we provide this coverage. So we have the foreign exchange services service that actually gives us the authorization. Without that, we cannot have it. A company will need to look for this insurance or coverage outside. So when we actually put in this bond or an obligation or a mechanism of control or to respect, so we have a very efficient system allowing us not to have in quotation marks any loopholes in our system. So as this has been said, so the market for insurance is actually global, and so we should look for capacities beyond one's market. And so you have the reassurance that allows us to mutualize within the country, and also international reassurance, so reinsurance. So it's actually the opening up to reinsurance Like Madame MURERA, the CEO said, so I think that's very beneficial for the market, and it is clear that we should also support local. You should have supported local stakeholders, and I think the Moroccan insurance take into consideration this reality, because there are a certain number of services, and I think that we've been able to have an ecosystem in terms of retention, and also premiums collection in an efficient way. But everything, so it still requires reflection, because we are having a market that is becoming more and more capitalized. So we should be able to advance and to manage this efficiently, activity efficiently. So thank you.
This one, because I know we're about 10 minutes over.
Okay, thanks. Maybe just to sort of clarify, I think picking up from Morocco, I think most jurisdictions really do have regulations or provisions in their laws that speak to exhausting the local capacity and the regulator having to have a say before a risk can be taken out. And I really think the conversation that we're having here is we're saying therein lies the problem, because everybody wants to maintain their sovereignty. But if we are going to advance the agenda of a unified African market, we have to now start looking into those provisions that we have in our regulatory framework. So when we talk about exhaustion of capacity, yes, in country we must exhaust it, but then we must have deliberate provisions that also speak to how can we also then make an offering to those that are within the region, within Africa, before we can take it out. But right now, you'd find within the country, they will exhaust the capacity, and a risk can end up offshore in the foreign market, and that is not going to solve our problem. So we really have to look at, yes, let's ensure that we develop our own markets. There's obviously an economic reason for that. But beyond our own market, can we have deliberate, intentional provision that sort of force us to go into the region, within the region, in the continent, before a risk can go out? Right now, a risk can be taken out of Zambia into the European market without any restrictions.
Into Allianz, it goes into
before
Munich
it goes
Re,
round
instead of
into
going
Africa,
to
before
SCR.
it goes into Morocco, it can actually end up somewhere else. So if we're going to have a unified market, that's a conversation that we must have. Thank you. That's my final thought.
And I don't think I can find a better way of wrapping up this conversation. Thank you very much to all our panelists. Apologies, of course, for Hope MURERA. She had another engagement. And thank you to you for your time and attention. Much appreciated.